will include the hedging along with the either share or with a future contract. Okay. So in this time, we are either bullish or moderately, or either bearish or moderately bearish with the market. Okay. So it is opposite to the cover call. Last time we have learned about the covered call, but this time we will be learning about covered put. In the covered call, what we have done, we just buy the stock and along with that, sell the call option of either at the money or it can be out of money. In the same manner, in this strategy, what will we be doing? We will be selling the share. So this is also intraday strategy if you are doing with the stock. So in this strategy, what we will do? We will sell the share in the cash market. Okay, sell share in the cash market. And to hedge your position, what we'll do? We will sell the put option. Okay, so we need to sell the share as well and need to share the put option. So when we sell the put option, we receive some kind of premium. Okay. So whatever the premium we will receive for selling the put, that will protect you if the trade is not going in your direction. For example, if the market is going down, you will make profit. But in case the share is starting coming up, so that the premium you receive from selling the put, that will protect you from the potential loss. Okay. So let's see with the example here. So suppose ABC Limited is trading at 4500 and Mr. A short 4300 put by selling the put option for 23. Okay. So stock was trading at 4500. Okay. And we have sell some quantity, whatever is the lot size. We have sell the share at this particular price, hoping that the price will come down. Okay. Because if the price will come down, only then we can make profit in short selling. So we are doing the short selling with the stock and stock is trading around 4500. Okay. To hedge this position, what we have done, we have choose the strike price 200 point below, that is 4300 strike price, and we have sell the put option for this. We have sell the put of this strike price and receive the premium of 24 point. Okay. So this is the premium you are receiving by selling the put option. Okay. Now, in case the stock is coming down, you will make the profit in the stock. Okay. But in case the price of the underlying asset is increasing, then 4500 plus 24, that will be your break even point. So 4520 is your break even point. So if the stock is coming upward direction, that you can, the 24 point can give you the hedging benefit. Okay. So after this level, when the market cross this level, you will start making the loss. Okay. But in case the trade is going in your direction, you will make profit. Now see what will happen. So we have choose the stock was trading at 4500. Okay. Now this is the value on which we have sold the stock. So for example, let's assume the lot size is 100 point. Okay. So for selling the stock, you need to pay this much amount. Okay. Now if the price of will remain at the same time, you will not make any kind of profit in this. If the price is coming 50 point down, you will make a profit of 50 point. If the point is 100 point down, you will make a profit of 100 point, and so on. So if the trade is going in your direction, you are making profit in the short selling. Okay. Now what will happen, because we have sold a call or put option of this particular strike price for this individual stock price. Okay. So in this case, if the market remain at this level, you will make a complete 24 point profit, then again 24 point profit, then again 24 point profit. And if the stock price remain at this level, whatever, which is my strike price, still I am getting the 24 point. Here the intrinsic value of the put would be 100 point, because we are making a loss of 100 point, but because we have received the premium of 24 point, that's why the loss would be only 76 point. Here the intrinsic value would be 200 point. If you minus 24 point from 200, it will be 176 point. Here the intrinsic value of the put would be 300. This is your loss, but we have received the 24 point as a premium. Now my net loss would be this in the put option. Now, if you see, we are making a profit of 500 point in the stock, and we are making a loss of 276 point in the put option. So overall, we are in the profit of 224 point. Again, here you can see we are making a profit of 400 point in the short selling by selling the stock, and we are having a loss of 200 point, or it can be 176 because we have received the 24 point. So net profit would be again 224. Here again 224, here again 224. So by reaching a particular level, our maximum profit is 224 point. That is my maximum profit. Okay. So if market is 200 point down, still I'm making a 224 point. Again, market 300 point, still my profit is remain the same. If the market 500 point, still my profit remain the same. So whenever I reach my threshold, it is advisable you can exit at this particular time, or again you can modify your strategy, or you can do anything by you can exit from this and continue your that position, and you can do another uh, put writing by choosing any other at the money strike price. Okay, so in this case your maximum profit is defined when reaching a certain level. Your profit is restricted to 224 points. Now now in this case you are making a loss of you are making a profit of 100 point here. Okay, and 24 point by selling the put option, so total profit would be 124 point. If the market is 50 point down, you are making a 50 point profit in the cash market, and 24 point profit in the by selling the put option, so your profit will remain 74 point. Now if the stock remain at the same price, there is no change in the stock, will not make any profit in the stock, but you are making a profit of 24 point in the by selling the put option. Okay, so you are making a profit of 24 point. Okay, now the stock is coming upward direction. For example, the stock is moving against your direction, and if it is only 24 point down, then this is your break even point. So if the stock is 24 point up here, okay, so you are making a loss of 24 point in the cash market, but because we have hedged the position and received the 24 point premium, so 24 minus 24 equal to 0. This is my break even point, where is no profit and no loss. Okay, so ultimately we will not get any kind of loss if the stock move up to 2524, that is my break even point. But if the stock move further upward direction, now in this case you are making a loss of 50 point. But we have sold a put option, so my profit will remain 24 point. Okay, so I'll get only 24 point. Now I am making a loss of, I can get up to unlimited loss in this case. If the stock is going upward direction, so I can get only 24 point premium, and that is my maximum profit by selling the put option. So in this case my loss is increasing because the stock is not going in my direction, it's not going in my favorable condition. Okay, now in this case I'm making a loss of 50 point, but I am making a profit of 24 point, so overall I have to bear the loss of 26 point. Here I am making the loss of 100 point, here is more point. Okay, so here you are getting the 24 point profit, but overall your position would be in loss because it can only hedge up to 24 point in upward direction. So if the stock is not going your favorite direction, what you can do, you can exit. Okay, and square off your position. This is the simple calculation. Okay, so in this way, what you can do, you can trade like this. Okay, now I I'm going to NSE and choosing a stock on which I am bearish. Loser. So I have to choose from the loser. And Hindalco is there, Dr. Reddy is there, Wipro is there, Max Health is there, Bharti, Cipla 10, lots of stock are there. Okay. For example, we were watching Dixon as well. So Dixon and Mesdoc, we have discussed Mesdoc as well. Mesdoc is continuously falling for the last few days. Okay. So here you can see the stock is, and what you can see like Mesdoc. Okay. So yeah. So in the last session, it has also coming down, and we are waiting for a reversal for this. If you are making, if you see any kind of bullish candle here, then we can expect a reversal. So if you choose same stock, or you can choose any other stock like Wipro. Okay, so I'm choosing Wipro. Wipro would be fine. Let's go to Excel. Now we are using covered put. So we need to short sell the stock and selling the put option. So this would be the strategy. You need to sell the stock in the cash market, and you need to sell the put option as well. Okay. So when we sell the put option as well, you need to pay the high premium. Okay. So for example, we are using Wipro as an underlying set, and the lot size of Wipro is okay. So lot size of Wipro is 3000. So if you sell the same stock in the future, you need to pay the premium of 1,12,000. Okay. The lot size is 3000. And Wipro stock is only 1 point down. So open price was 173, and again last traded price was also, there is not much change in that stock, only 2 point change. Okay, so we need to check another stock. So we
Sir,
choose one.
along with gainers and losers, we can also check volume shockers, no, sir? Because even if,
Yes, yes, we can choose like whatever we are we have chosen from the long build up, short build up stocks. We can filter from that
volume
as well.
shockers
Yes, yes,
below that gainers and losers, there.
yes. So right now we are choosing Dr. Reddy. We can try with Dr. Reddy.
Yes, sir.
Yes, okay. So it is at least 14 point down. Okay. So open price was 1227. 1227. So we need to sell the stock at this price. Quantity would be this much. So investment would be this one multiply by, no need to check the lot size. What is the lot size of Dr. Red? 625 is the lot size. 625 is the lot size. So you need to buy Dr. Reddy, change the stock to Dr. Reddy. So this was my opening price. and the lot size is 75, so I need to pay this much for short selling this particular stock. Okay, along with that, I'm coming to Dr. Ready option chain. Okay, so we can choose this strike price or we can choose this as well, not a problem. Okay, 1220 at the money as well. So 1220 strike price, the premium was at 23.80. We can make it 24. 1220, 1220 and 24 for premium. Yeah, so premium is around 24. The amount we are paying for this would be 24 multiplied by 625. The value of this would be, okay, but for the margin for this would be around, we have to come choose option and 1220 put option. So when we are selling the put option, we need to pay again high premium. Okay, and same for the future, you need to sell the future as well. The total premium what you are paying is 1,61,000 to make this contract. If you are making this future, the premium you are receiving is 17,000. Okay, 17,000 total premium you are receiving by making this strategy, and 1,61,000 would be your investment. Investment in future and put. Okay, so if you are doing with future and put option, this would be your total investment. If you are doing with the cash market, you need to pay 7 lakh along with 15,000. Okay. Now, what will happen? You will receive the premium of 17, around 17,000. Now, if you now if you see, check the same stock close at a price of 1210. Okay, so it is 1210. So in which you can make a profit of 17 point. Okay, and the put option from 24 to it reached 28. Okay, so this is the last. We can make it 29 as well, not a problem. Okay, so there is a difference of 5 point. Okay, minus 5.0. Okay, the premium was 24 in the morning, and while around when the market was closing, it is 29. So we are making a loss of 5 point here, but we are making a profit of 17 point here. So 17 minus 5 equal to 12. So will be making a 12 point profit here. Okay. Now lot size is 625. So 12 multiplied by 625 can be your profit. This is your profit for the intraday. If you do the same strategy in the intraday, if you want, you can continue with the, if you have choose the strategy with the future contract, then you can continue till the end of your month. And but if you are choosing same strategy with the cash market only, then you can see this would be your profit. In the put option, we have to bear some kind of loss, 24 to 29, so it would be 5 point loss. But if the if you check the stock in the cash market, you can see the price change from 1227 to 1210, so we are making a profit of 70 point. So overall, with using the hedging strategy, we can make 12 point out of this. Now, what will happen in case we continue the trade for the next few days? Okay, so if you have make a future contract with this, like the 21227 is my price. If the price is coming 1250, 1300, 1350, and so on. If the price is this much, okay. So in this case, we don't have any kind of loss. In this case, we are making a loss of 23 point. In this case, we are making a loss of 73 point. In this case, we are making a loss of 123 point. Okay, if the price coming up, okay, and we have received the premium of 29 point. So only here I will make a profit of 29 point. Again I am making a profit 29 point, not 29 point. Again only 29 point. In this case, I'm making a profit of 29 point. In this case, I'm making a profit of 6 point only. In this case, my profit nahi, I'll be in the loss. That should be my loss. And for this again, okay, so you can see it will be the condition of loss. In case of price coming down, now in case of 1200, in case of 1150, in case of 1100, or in case of 1050. So if the price is coming down, now you will make the profit of 27 point in the this, and 57 point this, 127 point this, and 157 point, along with 24 point here. So we have sold the call option of 27 in this case. So we have received the premium of 24. So in this case, you will get the profit of 24 point. If the price is coming at this level, then the intrinsic value of your would be 30 point. Okay. So we have sold a call option of 1220, and in case of 1150, okay. So 1220, 1220, and in case of 1150, okay. So in this case, 1220 minus 1150 would be 70 point. So I am making a loss of 70 point, but because we have received the premium of 24 point. Okay. So here would be the 24 minus this would be this one minus this one. So I am making a loss of 46 point here. Okay. In the, just wait. Yes. Okay. Okay. In this case, the intrinsic value would be like 150, and in case the intrinsic value would be 200 point. Just wait. 1220 1220 minus 1100 would be 120 point, and again 1220 minus 157 would be would be 17. So here I'm making a loss of this much, and I receive the premium of 24 point again. Okay. So if you minus this value from this, minus this would be 96 point, and here again this one minus this one would be 146 point. Now we have received the here 57 point. We receive the premium of 57 point and making a loss of 46 point. So that will be my profit only. And in this case, I have received this much minus this again 31 point. In this case, this was minus this one equal to, no, there is some, there is some problem that we have received this one and minus this one 11. So here it would be 11 point only. Now you can see this is my maximum profit here. 11 point, I can make a profit of 11 point in case if the stock is coming downward direction. That can be my maximum profit multiplied by the lot size. So it would be around 6,000 something equal to this one multiplied by this one equal to 6875 would be no problem. So in this way you can trade with this stock, or so it's all up to you. If you want, you can choose it for intraday purpose as well, or if you want, you can continue with the future trade and make it for the entire month. Okay, so same thing, you have to choose any stock which is moderately bearish, not so much bearish. If the stock is coming down again, you can see your loss would be restricted to that, just like we have seen here. In this case, you can see here the risk reward ratio is more favorable because of the strike price you have choose. You can see the loss is limited to this and we can make a good amount of profit in this case. But in our example, the amount is not so favorable with this. This is not favorable condition. So we can choose another strike price instead of this so that we can receive higher premium or we can make good profit out of this. So what we can do, we can choose another stock from loser tab, and like we can use Sun Pharma as well. We can use, we can try with Hindalco. Okay, so we can try with Hindalco. Hindalco has a lot size of 700. Okay, so Hindalco open price by 955 and it is coming down for 14 point down. So closing price was around 44 point. So there is a difference of 11 point here. So open price is 955 and closing price is 945. So there is a difference of 10 point. 955 and closing price of 945. So there is a profit of 10 point in this. Okay, and lot size is 700. 700 and so put option we are choosing 950, 950. So 950 open price around 15 and closing price is about 20. 15 to 20 or 21 you can say. So there is a loss in of 6 point here. So 10 point profit and the 6 point loss equal to the profit of 4 point. Multiply by the lot size is 28 point. 2800 would be your profit. Okay. So again, if you want to, you can continue with this trade for the entire month. or whenever you want. So Hindaelco. You can see stock is continuously falling from a higher price, and right now it is consolidated. It is in this particular range. Okay, so this is the range in which the stock is trading right now for the few weeks or few days. If the market break this level, then we can see the stock will come down, or it can slip up to another support area. It can come up to this, or this would be another level. So these can be the support. Next support level would be around this. So if the stock cross this level, we can expect the price can come up to this or this level. Okay, and if can take support at this level, we can see the stock can come up to in upward direction, or we can see Fibonacci tool here.
Sir,
There
here the support will be at red candle order block, no, sir?
yes, so you can see if you place a Fibonacci tool here,
Sir.
so it is already crossed 61%. Okay, so it has crossed this particular level. The 61% level has already crossed. Then we can see another level can be 78, 0.78%. It is close to the 78%. So if the market break this particular level of 930 or 935, that we can come up to this price as well. That would be 78% value. Okay. And these are the other value as well. And this is your 100% value. And after that, we have 127 and 161 level as well. Okay. So hopefully it may possible that it can take support from this order block, and if it doesn't take this support from this level, then we can expect the market can come up to 912 or 900 something. Now if the price is coming to this level, what can we can expect? 945, for example, 945, 955, and 945, 945, 935, 925, 950. Okay, so here you will make no profit, here you make a profit of 10 point, here you make the profit of 20 point, you make the profit of 30 point and 40 point. And for reaching 905, you make a profit of 50 point here, multiply by the lot size. Okay, and strike price we have choose for this 95 950. So we have choose the strike price of 950. So in this case, we'll make a profit of 15 point, completely 15 point profit. Okay. In case of that, we have, the loss would be 5 point, but we have received the premium of 15 point, so 5 minus 15 equal to 10. In case of this, there would be break even point for the put, no profit and no loss. Here would be the loss of 25 point, but we receive the premium of 15, so here would be the loss of 10 point. Here would be the 20 point loss, and here would be the loss of 30 point in the put option. Or 10 point here, minus 10, minus 20, and minus 30. So overall, the profit is 15 point. Here would be the profit of 20 point. Here is again 20 point profit, again 20 point profit, again 20 point profit, and 20 point. So in this case, if the market is coming down, okay, then you are making a profit of 20 point. 20 point multiplied by 700 equal to this one multiplied by this one, that is 14,000. You can make a profit of 14,000. In case of the price is coming in the upward direction like 960, 965, 975, sorry, 965, 975, 985, 995. Okay, so in that case I will make a loss of 5 point here, loss of 10 point here, of 20 point here, or 30 point here, and so 40 point here. So this is would be my loss. Again, minus 10, minus 20, minus 30, minus 40 would be my loss, and receive the premium of only 15 point. So it will protect me only 15 point. So 15 minus 5 equal to 10. 10 minus 15 equal to plus 5. And here the loss of minus 5, minus 15, and minus 25. Okay, so this would be your loss. Okay, so this is your profit and loss ratio. So if the market is going in your favorable condition, the maximum profit can be 20 point, and in this case your minimum profit can be 5 point only, and maximum profit can be 20 point only, but your loss can be unlimited if the stock is not going in your direction. So while reaching this particular level, when your profit is restricted to your only 20 point, what you can do, you can either square off your position and make a profit of 20 point, because if the stock is falling down like more, the you will not make any
Sir,
kind of
if the price comes to 935, then when the premium is 15 rupees, 955 strike price, uh, yes, sir. Okay. Profit will not be there, no, sir,
here.
because we would have shorted the put, so 20 rupees premium will be there. 5 rupees loss we will get it in option, no, sir.
In this case,
Yes, sir.
because we have sold this one. Okay,
Yes, sir. Okay, okay, okay. Okay, sir.
okay,
We
okay.
have sold the 950. Okay, sir.
Yes. That is my break even point. We have received the premium of 15 point now, so there would be no profit and no loss in the put individually. We have received the 15 point premium, but we have the intrinsic value of 950 would be 15 point. So 15 minus 15
Yes,
equal
yes,
to
I
0.
understand. I
So
thought it is
now, yeah,
955, sir.
yes, okay. Now, because we are making a profit of 20 point, 20 point is your net profit. Okay. So this is how you can use this strategy. So if you want to do the same thing in intraday, so it is preferable, because if the stock is it may possible कि next day it may possible stock can get a gap up opening or so on. So it is preferable if you are making this strategy in intraday, you can do that. And if you are confirm about the trend of the stock is continuing to fall, or stock is falling from a particular range, because if you make this entry at this level, this could have been more profitable. So we need to check the stock which was is start to fall, or it is oversold region, or it can be on overbought region, sorry. Only
Overbought.
then, if the stock is
It should be
on the,
above 80 RSI.
yes, and if you see any kind of reversal candlestick pattern on the top, and for example like bearish engulfing or bearish army, or evening star pattern, and after that confirmation you can enter in that particular trade. Okay, so this is how we have make 4 strategy. Okay,
Okay.